Hey everyone, welcome back to another video, and in this video I'm going to be talking about how much money you actually need to start day trading. Unfortunately, there is no easy answer or straightforward answer that I can give you in 1 minute or 2 minutes because it depends on so many different factors. So let me break them down, and hopefully by the end of the video you will get an idea of how much you actually need to start trading. The first thing you need to understand is what type of market are you going to trade at. There is the crypto market, the stocks market, the futures market, the forex market, right? A lot of different markets, and the leverage in each of them is different, and the amount of money that you can make per tick is also different. For example, in the future markets, on average, one contract costs $500, and per tick, which is around 2.5 cents, you can make around $5 depending on the future or the contract that you are buying. So you could see that with $500 you could actually make some decent money, maybe $50, $100 if you are scalping, $50, $25 if you are scalping. At the same time, you can lose a lot because you could lose a minimum of $5 when the stock goes 2.5 cents or ticks a little bit against you. So in the future market, you could do that. You could start with a small amount of money. There is no PDT rule. There are no other factors that could prevent you from trading. But the issue here is the future market, you do not get a lot of, let's say, options to trade from. Futures market, there are a few contracts that you can buy or a few different indexes. But in the stock market, NASDAQ alone, you have 8,000 stocks to pick from. Every day you can check the gappers list, you can see what are stocks in play, what stocks are not in play, the volume, catalyst, gappers, I mean a lot of options to pick from, and every day there is something that you can play from, and this is the main reason that I am trading stocks. In stocks, on the other hand, unfortunately you cannot make as much money, or you cannot start with really small money, same as in futures. Why is that? Think of it this way. Apple per share, let's say it costs $150. And let's say you buy 3 shares for $150. That's basically what you start from. The stock moves on average on Apple $2 a day, which means that with your 3 shares, you could make up to $6. Then remove the commissions, remove the losses, previous losses if you got some losses on it, and you end up basically with nothing or minus. It's really difficult to grow your account in the stock market starting with $500. The second thing that you need to pay attention to is the float of the stock. Are you going to trade high caps or low floats? If you want to start trading low floats, I'd say yes, you do not need as much money to trade them. You need small start, $500, $1,000, $2,000. That would be actually enough to trade these low floats. What is the issue with low floats? The issue with low floats is that they are easily manipulated. They move a lot, 20%, 30%, 50%, 100%, or maybe sometimes hundreds of percents intraday, which means that you can actually double or triple your account and make a lot of money right there, but at the same time, you can actually lose a lot. Why are they easily manipulated? Think of it this way. Let's say that there is a company that consists of 2,000 shares only. Each share costs around $1. It means that some guy with $2,000 can easily manipulate the price of the stock, pump it or dump it. I'm not saying that the low float stock is actually a company that consists of 1,000 or 2,000 shares. For example, less than 20 million shares. Big players, they can easily manipulate this price. And you as a beginner, you could actually lose a lot. I know that people, they're coming in the stock market thinking that it is easy to make money right there. They think positively, which is good. I mean, positive thinking is something that helps us all, but not in the stock market. You cannot think that, okay, I'm going to the stock market, I'm going to buy this low float around here and I'll double or triple my account. You could easily burn it as fast. If you want to focus on low floats, if you want to grow your account right there, if you want to make it your main concern, making a strategy that actually works for on low floats, then yes, maybe that is something that you can do. Focus on it. Small account could be helpful right there, but in my personal opinion, I really do not recommend starting with low floats. Start playing high cap stocks like Apple, Tesla, Amazon, Nvidia, a lot of other companies right there, stocks that have more than 100 or more than 50 million shares. This way, you can actually learn to trade the right way. These stocks, they are manipulated, the whole market is manipulated, but at least they're less manipulated. And if you can make money trading high caps, and get some experience watching the markets, in the end, later on your experience, you can slowly transit to low floats and trade them if there is some decent opportunity right there. Now on the high caps, unfortunately, you really cannot start with small with a small account, like I told you, $500 or $1,000. In my opinion, you need at least $3,000, $4,000 or $5,000, $5,000 at least to start trading these high caps. And one thing that I want to remind you guys is the margin that you're getting. So this is the third point. What broker are you actually going to open an account with? Some brokers, they require a minimum deposit. So you need to check what is the minimum that I need to deposit to my account to open an account with that particular broker. Maybe you want to trade futures with $1,000 only, but your broker requires a minimum deposit of $3,000 or $5,000. So that's something that you might want to check. The broker that I'm using is Interactive Brokers. If I'm not mistaken, at least when I opened an account right there, they required a minimum of $3,000. But now you come to another issue, which is rule number 4, the PDT rule, which is pattern day trading rule. Some brokers, especially US-based brokers, they require you to have a minimum of $25,000 if you want to day trade. If you have less than $25,000, you only can take 3 trades per week. Don't think that this rule is applied only to people who are living in the US. It's applied to everyone who has opened an account in a broker that is based in the US. I live in Russia. I opened an account with Interactive Brokers, which is based in the United States. Because of that, I am also subjected to the PDT rule. How can you overcome this rule? There are so many ways. One of them is opening an account with an offshore broker, a broker that is not based in the US. For example, CMEG. This broker doesn't really require you to have a minimum of $25,000. There are some other offshore brokers that you can choose from. But there is another issue, is that on Interactive Brokers, for example, the commissions are really low, 0.0035 per share or $1, for example, per ticket. CMEG takes almost $3 per ticket. And think of it this way, I'm opening an account with an offshore broker because I'm having a small account, $1,000 for example, and I'm being charged at least $6 per trade, in and out. And if you're getting in, partial, and out, you could pay commissions up to $15 with a small account, which is not in your favor. So you really need to consider these things when you're opening an account. What broker you want to open your account with, how much they charge per commission, will I be subject to the PDT rule or not? And if you are starting with $25,000 and more, then you do not have to worry about this rule. And finally, you need to understand what is your goal from trading. Do you actually want to make a living out of it, maybe some side income, or just you want to start learning to day trade? If your goal to get into trading is to make a full-time job out of it, then unfortunately guys, I'll disappoint you, that will not work instantly. Why is that? Because it really takes experience to start making money here. Similar to any other job, it requires you thousands of hours of watching the markets, a lot of discipline, a lot of practice, a lot of journaling until you finally can make money out of it. You need to understand that this is a business, and business requires you to put some money in it before you actually make some money, right? Even college, I mean, you pay tuition for college, could be 4 figures, 5 figures, 6 figures, depending on where you live. And then eventually after you graduate, there is no guarantee that you will get a high paid job. It's the same thing with trading. You need to put money into learning. You need to put money into practicing. You need to put money into your initial losses until you eventually make money. So what I would recommend you guys do is first start trading in simulator, which is free. You could try, for example, stock trading simulator that BBT offers for free, or buy a simulator, DAS Trader simulator, which costs around $100 to $150 per month. Practice trading right there. Once you start making money with the simulator, then you can open a broker that you can start trading live there, but start small. Do not risk a lot of money. Be something like this. I want to open an account to start learning how to trade. That should be your goal. That way you do not set some high expectations. Your goal is to learn trading. How much does this broker requires me to deposit so that I can start at least getting that real-time data, so that I can watch the market, so that I can journal the trade, so that I can understand the price action, so that I can trade in the simulator. That should be your first question when you're getting into trading. Then you're journaling, trading in simulator, practicing trading, and after that you're getting into live account, risking a small amount of money, $5, $10 per trade, $2 per trade, until you become consistent. After that, when you are making money with a small amount of shares or with a smaller risk, you need to ask yourself a question, how much do I want to make a day? If you want to make $50 a day, you need to have an account where $50 is 1% of your account. So if you want to make $50 a day, you need an account of $5,000. If you want to make $100 a day, you need an account of $10,000. If you need to make, I don't know, $1,000 a day, you need an account of $100,000. or you need a broker that gives you margin of, for example, that amount of money. If I want to make $1,000 a day, I need a $100,000 account. I have only $25,000, so what do I need? I need a broker that gives me a leverage of 4-to-1. Now remember, you need to be careful and safe using leverage, because at the same time you can lose a lot. So this is basically it, guys. I hope you enjoyed this video. If you have any questions, write them down in the comments below. Make sure to hit the like button, share and subscribe to our channel, and I'll see you in the next video. Bye guys.